Welcome to Module 9, Affordable Care Act. This module is broken up into 5 sections: the ACA, Individual Shared Responsibility Payment, Premium Tax Credits. We'll end with a recap and then a knowledge check. By the end of this module, you will understand the 2 key tax tenets of the ACA, understand the Individual Shared Responsibility Payment, understand most of the exemptions, know what documents are required for tax preparation, and finally, become familiar with issues that are beyond scope of a basic preparer. Let's talk a little bit more about the ACA. Taxpayers are required to have health insurance, known as Minimum Essential Coverage, MEC, or qualify for an exemption. Please note that the Individual Shared Responsibility Payment has expired for 2019 returns, but it is still applicable for 2018 tax returns. However, it is now a $0 penalty. So for those without the MEC or an exemption, they're required to pay that $0 penalty as a part of their tax return. Note, this penalty does not apply to taxpayers who qualify as a dependent of another taxpayer. Some taxpayers who get insurance through the marketplace may qualify for a premium tax credit. Those that do purchase from the marketplace may choose further to receive an advanced premium tax credit for the insurance purchased. The premium tax credit must be reconciled every year on the person's tax return. Let's talk a little bit about the Individual Shared Responsibility Payment. Preparers fill in the question on Section 5 of the Form 13614-C, having health insurance through the marketplace/exchange, to document who had health insurance. For minimum essential coverage, there are a few commonly seen types: employer-provided insurance, individually obtained insurance, and government plans. If a person does not have a minimum essential coverage, the preparer is to review all possible exemptions before the individual shared responsibility payment is assessed. A lot of these exemptions are now obsolete for 2019 returns, but you can find them in the publication 4012 for other previous year returns. What is the premium tax credit? The premium tax credit is a credit designed to help certain eligible individuals and families with low or moderate income afford health insurance purchased through the health insurance marketplace. In essence, it lowers one's health insurance premiums. The PTC is reconciled on the tax return and may increase or decrease the taxpayer's refund or balance due. The health insurance marketplace is where you can find out information about health insurance, purchase health insurance, and obtain financial help if you are eligible. Taxpayers who purchase insurance through the marketplace will receive Form 1095-A. This form is required in order to complete the tax return. The PTC is an issue that requires an advanced level certification. If anyone on the tax return purchased health insurance through the marketplace, refer that taxpayer to preparer with advanced certification. Let's recap. First, determine for every person on the tax return if they had minimum essential coverage or some form of an exemption. Some exemptions are straightforward, and some require guidance of a more experienced preparer. Determine if any person on the tax return obtained insurance via the marketplace. If they did, they must have Form 1095-A to compute the premium tax credit reconciliation. Only an advanced level preparer can complete a return for a taxpayer who had health insurance purchased through the marketplace. For additional resources, we have a few Dear Iris letters, and up next, Module 10, Finishing the Return.